Good morning this Tuesday, the 11th of February. I'm Grady Wolf, market analyst with Bell Direct. Wall Street started the week in positive territory as investors look past Trump's latest tariff talks about a blanket tariff on steel and aluminium imports into the US and bought into growth areas of the market. The Dow Jones rose 0.38%, the S&P 500 added 0.67%, and the tech-heavy Nasdaq led the gains with a near 1% rise. Strength in the US jobs market dampened investor hopes of a near-term rate cut, though, as the latest unemployment data showed the jobless rate in the world's largest economy fell from 4.1% to 4% in January. At the same time, 143,000 jobs were added. The Fed has already cut the US cash rate once last year to 4.25% to 4.5%. However, with signals of a stronger labour market, a rise in the latest inflation reading for the last 3 months, and strong retail sales growth, the US central bank is unlikely to cut rates again until these inflationary drivers ease. In Europe overnight, markets in the region started the new trading week higher, with the Stock 600 gaining 0.58%, while Germany's DAX added 0.57%, the French CAC rose 0.42%, and in the UK, the FTSE 100 ended the day up 0.77%. Across the APAC region on Monday, markets closed mixed as escalating tensions around Trump's tariffs implications weighed on investor sentiment. Japan's Nikkei closed flat, South Korea's Kospi index also closed flat, Hong Kong's Hang Seng rose 1.76% and China's CSI index rose 0.21% after China's consumer inflation rose to a 5-month high in January amid higher consumer spend in the lead up to the Lunar New Year. Locally on Monday, the ASX 200 started the new trading week in the red with a 0.34% loss at the closing bell as a sharp sell-off in tech stocks weighed on the local key index. Reporting season continued on Monday with key names releasing first half results that surprised investors. Trump's new tariffs on aluminium and steel weighed on the local index early in the session yesterday before realizing that less than 1% of China's steel exports went to the US in 2024, and China is Australia's largest buyer of iron ore, which is a key ingredient used to make steel. JB Hi-Fi faced inflationary pressures and subdued demand in the first half, but still managed to post some pretty strong results, with total sales rising 9.8% to $5.67 billion. NPAT rose 8% to $285.4 million, and an interim dividend increase of 7.6% was announced to 170 cents per share. However, investors sold off shares yesterday, likely due to a 13.5% rise in inventory and a 9 basis points drop in inventory turnover. Payables also increased by 16% year on year in H1. CEO Terry Smart's cautious remarks about the retail market uncertainty and heightened competition also likely spooked investors yesterday. Ansell, on the other hand, had investors buying in on Monday after the global leading protective equipment producer released strong first half results, including sales growth of 12.5%, EBIT up 20.9%, and a dividend of 22 US cents per share. On the local reporting season calendar today, we will likely see investors react to the results out of global healthcare giant CSL. On the commodities front this morning, oil is trading 2.02% higher at $72.44 a barrel. Gold is up 1.68% at $2907.41 an ounce. And iron ore is up 0.13% at $106.37 a ton. The Aussie dollar has strengthened against the greenback overnight to buy 62.8 US cents, 95.29 Japanese yen at 50.73 British pence, and 1 New Zealand dollar and 11 cents. Ahead of Tuesday's trading session here in Australia, the SPI futures are expecting the ASX will open the day up 0.37%, and that's tracking Wall Street's positive start to the week overnight. And now let's dive into some trading ideas for your consideration today. Bell Potter has downgraded the rating on JB Hi-Fi from a buy to a hold and have increased the 12-month price target on the leading tech retail company from $98 per share to $99 per share, following the release of the company's results yesterday. The downgrade to a hold follows the analysts believing JB is currently well valued and limited earnings upgrades in the near term are already priced in at the current PE multiple of around 23 times. And Trading Central has identified a bullish signal on Resimac Group following the formation of a pattern over a period of 26 days, which is roughly the same amount of time the share price may rise from the close of $1.05 to the range of $1.11 to $1.13, according to standard principles of technical analysis. And that's all we have time for this Tuesday morning. Have a wonderful day and happy investing.